The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Let's check out where the markets are at right now. We had some spikes and pull it on back. We got the S&P right now. It is currently up 13.25. We got the Russell up 6.8. We have the Nasdaq up 27.75. The Dow right now is up 106 points on the day. Copper currently is, let's see, we got up 1.5%. And silver is up just a little bit, about 0.25% right now. Gold's down about 0.25%. A little mixed movement right there in the metals. Looking on over at oil, we got oil currently up about 50 cents on the day. We got corn is up barely, just about a point. We got soybeans up just a couple points, so pretty small moves in the ags for at least, not necessarily the whole picture, but at least the close to close. Check it out, euro dollar. Euro dollar right now is currently down 18 pips. Pound dollar is up 22. Dollar franc is up 3, with dollar CAD up 45. Dollar yen is currently up 69 pips. Aussie yen is up 44. Euro yen is up $1.20. Pound yen is up $1.36. And euro pound is currently down 10 pips on the day. So, just, look at all that and see where it's all at and see where it's heading. I got to figure that out next, right? Now, reminder, it's Friday, okay? And though we do get some big moves on Friday, occasionally, more often than not, what you're going to see is you're just going to see lower volatility, okay? And that can be skewed by, big news days, the occasional rare, big move like, something that's happening in Russia, things move, whatever. And you see that, and you're like, oh, man, I'm going to make sure I catch that next time. Well, that's an unexpected movement news-bound event. So remember, a lot of times on Fridays, you do not have near as much volatility in the last half of the day. Things get quieter. So you may want to make sure you're focusing on, checking out potential premium collection style strategies. You might be looking in the money binaries. You might be looking at butterflies. You might be looking at iron condors. As if you trade equity options or you trade futures, a lot of people, they hop in and they actually take advantage of these weekly contracts, and especially on Fridays. So, because you can get them so cheap and you can do so much stuff. We have that every day on Nadex. So, not Nadex, but we as traders have access to that every single day. We don't have to wait till Friday to get Fridays. Okay? Every day we got Friday expirations. And we got them multiple times an hour, right? So, we got our multiple contracts doing that every hour, and pretty much almost every hour of the day. On Friday, they have contracts expiring anywhere from 7 to 4:15. So I think it's the last expiration, because the FX pairs, the last expiration I think is 4 o'clock. It's not 5. So, you're talking like constant expirations. And anyway, so with all that, let's talk about what we got on news. We haven't really done a big news review, and I want to just, get you sort of caught up about what to expect, what's coming out. We had the current account come out on the pound, and let's see what else is going on. We also have, I want to say there was a big meeting today, but I don't see that. Okay, yeah, I thought there was one of the big meetings today, but there's not. So let's open it up, look at it, and see if we can just look at a little bit of this movement. And the main one I want to look at is going to be just our pound dollar, okay? Just because that was really the only news announcement we had. But we've had just some beautiful trends. It's straight up, look at dollar CAD right there. Oh, my gosh. So, that's just, can you ask for a better trend, Anyways, and because you don't want straight up because you don't catch it. You want that slight up. But pound dollar And we had current account out, and not really one of those big tradable straddle, strangle, awesome trades. And so what can you do? What are your options? And, maybe, like I said, it's not just a big tradable event. You could potentially go in and potentially look at that as maybe an iron condor style trade. And if you don't know what that is, that's basically, or a butterfly, basically it's where we're trying to collect premium on very little movement. Okay? You got to really make sure you're doing it correctly, especially on the pound dollar, because the pound dollar, being a more volatile pair, has the tendency, it can move a lot on you. So you need to make sure you definitely know what you're doing. But just to go over the stats for you, to help you out with this, help you put this together, and go, what could I have, done potentially to take advantage of this, and so I can learn what could I do to take advantage of this going forward. All right? And let me, I want to change one setting over here. And so, again, we're just going to talk about the pound dollar. We're talking about current account balance. Okay? Not sound like fantastic, wow, whatever, just current account balance. Well, to give you some stats on that, it looks like we had about a 28 pip move on the last one. The one before that, we had 10. The one before that, we had a little bit more. Let's see, we had about 55, so it was a big mover. One before that, we had about 50. Before that, the most we got 18. Let's see, moved 45, and it came back 30. One before that, 23. Before that, we had 14 up and 29 down. Okay. And let's see, before that, basically extreme side, 28. Before that, we got 50. And then going a little bit further, just trying to see, okay, we got an extreme of 60, but it came back to 28. And then we had about 30 on the one before that. So most of these, you're looking at about, you heard a lot of 20s. A few less and a couple more. So if you could hop on and do maybe an iron condor, I'm going to add this one to our plan. If you could do an iron condor for, really more, ideally as little as 30, but, a lot of times you wouldn't make anything. So I'd really push you to go more for a 40 or 50. If you can get $50 on an iron condor, maybe even $50 on a butterfly, but the problem is on the butterfly, you got that all or nothing going on. Iron condor, if it expires $10 above where you bought or sold it, whatever, who cares? So you lost $10. But if it expires 30 pips back inside, which is what you expect, then, now you made $30 on the trade. So I'm starting to learn more and more and more on trading news, especially further out in time, on these iron condors, because it's just a great opportunity on them. And eventually, I'm building I got an Oracle database engineer, and he's working with a SQL guy, and we're putting all this stuff together. I'm working on making a Forex engine, a news engine, that will go in and analyze all the Nadex instruments by every FX pair and draw you pip-based charts. So that way, and then actually analyze all the stats, and basically say, based on these stats, here are the requirements for a stat. This is the best one to do. And the final step is actually integrating it with the scanner, so it can actually find, okay, out of the 3 potential strategies, what exists that would be, an acceptable premium, either for, maybe doing a straddle, a strangle, whatever, or an iron condor or whatever, and would show you not only which ones to do, but which ones have premiums that meet those specifications, and you can click on a button and it opens up the contract for you. So you can open that contract up immediately. It would scan, not just scan the binaries or spreads, but it would scan them for that specific strategy and tell you which one. So now it's a whole different level of scanner because it's helping give you trades. And it would not just do it on one instrument. It would do it on every potential instrument within an expiration. So you can find a whole lot more, a whole lot faster. It's going to take probably the estimates between 3 and 6 months to get this to that level. So hopefully within about a few months, we'll have the first level where you'll at least have all the stats on everything, not just FX, because that's pretty much what I have it on right now. But I want to have it on everything. And then start being able to reverse build. We're going to add more and more queries into the stats to go, what about before it? What about after it? What about this expiration, this expiration, this expiration? And then where does it usually, hit its peak? Okay, about what time do we see the peak of the movement? And where it sort of reverts back. Like, don't expect it to go really much further after this time. And maybe there's a stat there, maybe there's not. So that's probably what we'll have to find out. And then we're also going to want to, I want to do it for 5 years of stats. But one thing I used to do a lot, and I love them, but I do seasonal spreads. And when I say seasonal spreads, I mean, because you hear me talking about Nadex all the time, I mean the futures, where I'd buy one contract, sell another. I do that based on seasonal stats because you have great win-loss probabilities, meaning, you're talking like 80, 90, sometimes 100%. And you have really, your risk to reward is easily 1-to-1, if not better. But you got to wait 3 weeks or 3 months for these trades to play out. So, I'd like to get those kind of probabilities, but bring it a lot closer in time. But what I learned from when I did that, okay, you can't just take every future seasonal spread. You got to look at delivery dates and last trade dates and roll dates and liquidity. This one trade may have 100% probability, but if it only has 3 contracts trading right now, probably not the wisest trade to do. You need to get, you need more liquid months. And then probably one of the most important aspects that I learned is I would actually look at the last 20, but I'd also look at the last 10, the last 5, and the last year, depending upon how often. On that case, there wasn't years, but you would look at year because it was it was multiple days in the year. But I'd look at 5, 10, and actually looked at 5, 10, 15, and 20. Well, I want to do the same thing with the news. I want to look at 5 years, okay? I want to look at 2 years. I want to look at 1 year, and then where applicable, I want to look at 6 months. So something that only comes out every quarter, 6 months wouldn't really, be any good to you. But something that comes out every week, could be good. So we may even have 3 months, for what? For something like oil that comes out every single week. So you have to have a set number of occurrences, and that'll help us set how the stats we're looking at, because stats can easily sort of get skewed by looking at more time. That's a big thing that can skew your stats. Hey, it's great, it's worked awesome over 5 years, but it hasn't worked at all in the last year. Say a trade like this that we're doing, every week or every month. So you really got to get that sensitivity piece. But you don't just want to look at that because maybe this was just a really abnormal year. So your ideal scenario is where you're seeing your 5 year, it's close to your 2 year, close to your 1 year, close to your 6 months. Now that's a great stat. Okay. The other piece on measuring, now that's your win-loss. Now, as far as your profitability stat, okay, one of the big pieces you got to really look at is you got to get rid of your extremes. And I'll talk about getting rid of the extremes and why when we get back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so that wraps up where we're at right there on that trade. And on the Iron Condors, I've went over some of these in detail. It's really just going in and it's doing the opposite of what you would intuitively think to do when you're trading a spread, okay? And we may do like a few shows next week where it really just I focus on spreads, I focus on butterflies because I've had a few requests about this. We're gonna go back and just do it again, and I'll do it again at the end. Make sure y'all got it down. But also just take advantage of those archives. We have all those archives of the Bull Bear, or not the Bull Bear. We also have the Bull Bear Binary Hour, awesome show this morning, TFNN that Tommy O'Brien knocked out on there, and but also of the Diagnostic Trading Hour, and. So you can even get more historical shows. When you hop on right there, you can hop on TFNN's YouTube channel. There's tons of stuff on there too. But just right there, the easiest place to get the most recent, last 25 or 30 or whatever, is right there on Tiger TV. And they list them all. You just go to the channel. And so I want to say that Diagnostic Trading Hour, I think it's channel 7, if I'm right. Typed the wrong one there, TFNN.com. We'll go over here to Tiger TV and then scroll down and, Channel 7, Diagnostic Trading Hour, okay? And then binary options as well. So you can go in and you can load the channel and you'll have the archives, and then you can actually view the archives right here inside the channel. So it's sort of it's a great feature we have. Make sure you take advantage of that if you're not taking advantage of it. And so after the commercial knocks out there, then you'll be able to go in and get it going. Now, on the iron condors, just to remind you, let's find something that has a little bit more, I guess, time. I guess we'll try these two, just because they're a little more volatile. That's why I'm throwing them up there. And we put gold on there. And then what I'll do is, there's a couple ways to do this, but one way is this is sort of a backwards way, but it is an effective way, is I'll put 1 to 1 in my risk-reward ratio. No other filters are on. And then I'll go down here, and I'll just see if I can find, okay, a couple spreads that have, I'm really going to look, it's sort of funny, low risk, but obviously not, I don't want too low, and you'll find out why. So I'll go right there. There's that one, 101.50, and then maybe I'll go, okay, so 101.50. I'll see if I can find a 101.50 down here. There we go. Okay, so I want it balanced out, like maybe like $30. So that's not going to work between the combined risk. And then if I find the one that does work, let's see, I don't see one on oil. It's a little bit, these are usually like before news is when we're usually trading them. We might be able to find, let's see, natural gas. It's a pretty volatile instrument. I'm not even saying that I suggested on natural gas, but I'm just trying to teach you how to do it here. And, okay, so that's good. Let's see here. Yeah, so, I mean, that's one possibility. So right there, it's about $30, okay? And it ticks the same as natural gas in 0.0001, okay? And we're getting actually about $35, almost $40 in premium. So if it stays within that tick range, 40 ticks up, 40 ticks down into the end of the hour, then we could have ourselves a nice little profitable trade. And again, it seems counterintuitive. But what we're going to do is we're going to do the opposite. Okay, this is about doing the opposite of what you would think that you would do. So, because that graph, if we charted it properly for you, it'd actually be upside down, okay? So instead of like looking to risk $40, say, make 400, when we think it's flat, we know there's not going to be a lot of movement left in the market today, we go in and we don't risk it, we reverse the risk. And it seems like the risk is through the roof, okay? You're like, that's why it's counterintuitive, okay? Because you're thinking, man, that risk is just way too high. And so there we go. Got that up. All right, so now what I'm going to do is I'll click on it. And remember, I said this is a sort of a backwards way, but it's a fast way. And one thing I want you to notice is this is almost all premium. So we have 17 ticks right there and $21 risk, or 20, that's almost all of that is premium. Because if I'm out of the money, all of my risk is premium. If I'm in the money, okay, then my proximity is the premium within my risk itself. And so what I'll do is I'll go in here. When I say premium, it's time value, because that's what we're trying to do in an iron condor. We're trying to create and make time value. So I'm opening these tickets up, but what I'm going to do is I'm going to flip them. Okay, so I'm going to go to sell and I'm going to go to buy. Okay? And now you're like, you're crazy. You're only going to make like $30-something on that trade, and you're risking $300. And it seems absolutely stupid. Problem is, if you buy that, you're probably going to lose, because the market's probably not going to move between now and 2:30 on natural gas. And if it does, how can we control that risk? How can we make it only a $30 risk on a $30 profit trade? I'm going to show you that when we get back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks. Welcome on back here to the Diagnostic Trading Hour right here on TFNN. And so what we're going to do is we're talking about these iron condors a little bit. And it's looking at like, what if I want to do one on natural gas? What if that's going to be flat right now? It's a pretty crazy instrument. Cool thing is it's a crazy instrument, which means that there's a lot of volatility built into that instrument, okay? More premium built in. And now I'm going to tell you right now, it is not the most liquid of all things to trade, okay? So I'm not telling you to try to go to town on natural gas. But it's great for showing you what I'm talking about. And so we're going to go in here. We're going to do just a little bit of math. I know that can hurt. No, don't tell me you have to do math. We're going to do a little bit of simple math for you. And we're going to go in and talk about how to do this. Because when you look at the trade, it seems the exact opposite of what you should do. Right? Because we're going to have this trade, and we're going to make $21. We're risking $370 on one side. On the other one, we're going to make 16. We're risking $384. And one, that could be a little bit misleading. I'm not saying it's it can make you misleading is not the right word. It can be make you presume something. I mean, it's accurate. That is the max loss. But there's max loss and there's like expected realistic potential loss, okay? I buy a stock for $80. What is my risk? Okay, if I buy a stock for $384, what is my risk on that stock? It's $384, okay? Is that likely? No. But is it reality? Yes, okay? So I just want to bring that up to you because I want you to get you to back off, let your mind back off, and to see that max loss is like, oh man, that's what I'm going to lose. You know, we need to do a little math. I'm not just saying to say it's not going to be it, but I'm saying you need to back off and go, you know, what's possibly here? Because I hear so many traders that trade these spreads, and they're like, oh yeah, man, every time I do them, man, I just lose because the market just doesn't move enough. And I'm like, so have you thought about doing the opposite thing? Have you thought about, instead of buying it, maybe sell the thing? And they're like, no, I haven't thought about that. Or they're like, well, I looked at that, but man, the risk is so high. It's like, but you're losing all the time. So probability is in your favor right now, right, buddy? You know? And they haven't thought about, you don't have to hold till expiration. Okay? So if I go in and I sell this 4,500 to 4,900 contract, okay, this one right here, and I sold it for 4.521, okay, and I buy the one below it, and I bought it for 4.484. My risk on a sell, okay, so this is my floor. Well, not, really, this is my floor. This is my ceiling, okay. This right here is my, entry price. Okay, and then I'm going to go over, and now what's my risk? Well, my risk on a sell, okay, is going to be from the price up to the ceiling. So, but instead of looking at risk, let's look at reward for a second, okay? My reward is going to be from the price down to the floor, because I sold at 4.521. The most I can make is down to 4.5. Now I'm going to go to the other side, and I'm going to go, okay, what's my profit potential on a buy? My profit potential on a buy is where I buy, okay, up to the ceiling down to where I bought. So right there, and then let's change our stuff over here. We'll get rid of one of those decimals because it ticks in ones, and it's always the last tick there. So, okay, so that's my profit, okay, max profit potential, okay? And I'm collecting money as long as it stays in. For every tick it's below 4.521 down to 4.5, I'll make $1 on this spread, okay? Which means if it goes below 4.5, I'll make all 21 at expiration. On this one right here, for every tick it's above 4.484, I'll make $1 all the way up to 4.5, it'll cap out. I'll make up to $16. No matter how high it goes, I'll make $16. So I maximize profit like right there at 4.5, which is hanging out at. It's been hanging out for quite a while. So what is my max profit potential? Okay, now this would require it to buy right in the middle, but what is my max profit potential? It's $37. So I make $37. So now let's look at, I don't want to have that big risk. Okay, I don't want to have that $379 risk. So now we're going to put max risk. Let's look at it and see what it is. Max risk. Now, again, it'd have to move a lot. You have to move 379 ticks, okay? And natural gas does move crazy. But right at the end of the day, it's on Friday. Let's check it out. So on the risk right here, my risk on a sell is going to be the entry price up to the ceiling. My risk on a buy is going to be the floor. Oh, it's going to be floor down to the entry price there. There we go. And again, we'll do the same thing, just so we have our normal looking ticks here. Okay. And then, so what is now this is combined. Now, I added these two numbers together, but my max risk is not the combination of the two. My max risk individually, okay, on the combined position is actually going to be a little bit different. So what we're going to do down here is we're going to go combined, up move, we'll say, okay, and combined down move. Because what's going to happen? What's the difference? How is this, remember I said like getting that real perspective there. On the combined up move, if I go in and I took the max loss because it went up, okay, and which means, let's just say this thing went down 400 ticks, okay, which is insane. Let's just say it went down that far, it went down like 400 ticks, then I would still make the profit on the buy. Okay, so my max worst case, if it flies up, is going to be right here. So my max worst case is going to be the max risk on the sell plus the profit on the buy. My max risk on the sell is going to be the profit on the sell plus the max loss on the buy. You'll get that and you're like, well, that still isn't that impressive. Okay, $363, that's a 10-to-1 risk to reward ratio. But what is my break even up move and my break even down move? Well, my break even up move, okay, is going to be, this is as of expiration to make it simple, but is going to be right over here. We're going to look at the price I bought, okay, plus the profit on the sell. Because if it flies, if it flies up, okay, then the price I bought, and I'm losing money on the sold one. Okay, so I got to cover that risk. How do I cover that risk? And I'm trying to just think the best way to explain this. If it flies up, I'm going to make max profit. Okay, it's the price I sold. There we go. That's where I'm backwards. Okay, so try to cover the risk I sold. So on an up move, it's the price I sold at, and it starts losing a tick for every tick that's above that. So if I sell 4.521 and it goes to 4.522, I'm down a tick at expiration. Okay, so but I made max profit because it was above 4.5. The only way I could lose on the sell is if it expires above 4.5, because I sold at 4.52. So if it expires at 4.50, then I made profit on the sell. So at 4.52, I get to get max profit on my buy side. So wherever I sold, I got a little bit of a hedge. I got 16 ticks of a hedge going on up. So now I have a hedge up to 4.537. If the market moves up, I'll be break even at expiration. Now let's go over here and let's look at what if the market moved down. Well, now it's the profit I bought, and I got a little hedge on the way down. So now I have 21 ticks that I'll get to keep, and all that premium there that I collected that will cover on my buy side. So my sell side made 21 ticks. So if my buy side lost 21 ticks, I would be break even, down to 4.463. Now let's look at doing what if I want to go 1-to-1, okay? Risk reward, up move, and 1-to-1 risk reward down move. Okay? Well, so meaning if I got out. Okay, if I got out, what price should I get out at if I want to keep a 1-to-1? Because remember, I don't like this big $363 risk. I don't want to take all that on. So we got a 1-to-1 up move and a 1-to-1 down move. And we go, okay, so my 1-to-1 up move would be total profit, okay? So we're going to go, okay, if I bought this thing, I'd have to lose. I have to go to my break even, actually, before I get that. So where do I start losing money? Past 4.537, I actually start taking on a loss because I made $21 on the one I bought, and I've lost $21 on the one I sold. So I start losing ticks, okay? I start losing ticks above that price. So if I can make $37 maximum profit potential, then 37 ticks above that. If I lost $37, then that would be my 1-to-1, okay, max profit to a 1-to-1 reward scenario. So it'd have to go all the way up to 4.574 for me to lose $37 on this trade. And the market I take, where did I sell at? What's my, what's my break-even point on the sell? So if the market moves down to 4.463, I don't lose anything. I get my money back, okay? So I'll get my money, I'll make enough on the sell to cover the loss on the buy. So after that, I start losing a tick. So if I take 4.463 and I go, okay, well, how much can I make? I can make 37 ticks combined between the two. So a 1-to-1 on a down move, okay, would be all the way down here to 4.426. So the only other scenario is you may say, okay, well, what if I don't expect to fully make that? What if I only expect to make the profit on one side or the other? Okay? So, I don't realistically expect it to expire, which you'd be surprised how many they do, but right at 4.5, maybe I want to be a little bit more conservative than that. And I want to say, let's just expect full profit on one side, and, maybe not full loss on the other side, or so let's go we'll just assume just one side of it. So we'll just say one-sided, risk move, okay? And we'll say, other side, risk, basically like going, hey, I'm trying to really, if I'm going for 37, I'm trying to make like 18, okay? So I'm trying to make like half of that. So if I'm really expecting that to happen, at what point would I be down $18? Or we'll just say half. So what I'm going to do is I can say, well, if it moved up, okay, on an up move, where would I get out where I'd be down basically $18, combined? Now, again, I'm talking about expiration. So I could go in and I could say plus, half, 0.5, there we go, times 0.5. And then I can go in and go on a down move. What's my break even? Okay. So we'll do minus, the 37 that I can make, okay, times 0.5. Because I'd say, it's very realistic to say you're probably going to make about half of that. Like you'll make a few bucks on one side, you'll make the full profit on the other. You probably make a little more than half, but let's just say you only make half. So you're trying to just really factor in as much reality as you can, okay? Well, that still takes you, like way down there. All right, so we're going to get rid of that to keep it simple, but I just wanted to, you can go in and you can go, well, what if I only did half of that? So now in a 1-to-1, which is the easiest model to look at, what does that mean as far as in relation to natural gas? Because there can be some big moves, all right? But usually they're, in the morning. They're not Friday afternoon. So it actually says my 1-to-1 risk reward, and this is doing this, by the way, with only like, what do we have in minutes to expiration on natural gas? We're talking 41 minutes to go. Okay, we would have got a lot more premium for this same trade at, say 8 a.m. Okay? So, now it would have been riskier because the market's about to open up, things are moving, all that stuff, you get that big move. But just looking at it where it's at right now, okay? And we can actually see what the price would be. But looking at where it's at right now, the market would have to expire, not just move, but expire above 1.574. It hasn't even hit that high all day long, okay? For the entire session, current session, it hasn't even went to 1.574. And then go way down here, okay? And let's see here. Let's bring this to the top. We'll put some price levels on here. So 4.5, like 7, 4. Basically right around there, okay? And then we'll do the other when we get back to the other side. And you're going to see, I'm loving these things. This is probably becoming one of my, definitely top strategies that I'm working on taking advantage of on a consistent basis more and more. And you'll see it when we come back. Be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Okay, so we're going through all this, and we found that basically we had a 1-to-1, okay, for a max profit to, lose that much money. How far would it have to go? And look at these ranges. I mean, they're massive, okay? It's a very large move, and this is a very, very small amount of time to go until we actually hit that. Or not, for it to hit that, not until we hit that. And it'd have to go all the way up here to this 4.574, all the way down here to this 4.426 level before we actually got nailed on the trade. So it's pretty cool to, sort of see how that works. And you can go in and you can look at different levels. You can see, okay, what would that be in a deviation move? And is that an expected, actual move for it to move down to that? 4.426 is basically a 1 deviation move down from, where we are right now. Now 4.574 is about 0.5 up. We have the list right here inside the scanner. And so 4.574 and 4.423 is looking at natural gas. So we're talking about basically moving down about 2/3 of a deviation from where it's at the moment, which is, or moving up 2/3, about 70% of a deviation up. So of an expected movement for a day, we're talking about having 70% of that happen on a Friday afternoon in the next 35 minutes. Okay? And, I mean, yeah, it's not the biggest concern. So if we go here and we look, you know, I sort of pulled these tickets up just so you can see some of the stuff. And it's really easy when you do this, real easy to go backwards. So make sure, you know, you do that high risk reward, or, you know, bad risk reward scenario when you get in on these. It sounds funny. But, you know, otherwise you end up pulling on, you do a straddle and you lose on the trade you meant to make premium on. And so if we look at these, let me move these down over here. Okay. And let's look at just where the price is right now. All right. So if I went in and I sold the 4.5 to 4.9, if I would have sold it for 4.521, okay, and currently the price is to buy back is 4.514. And if I would have bought the 4.1 to 4.5 for 4.484, currently the price to sell back is 4.485. Okay? And so I just go, okay, well, if this is a sell, entry minus sell, if this is a buy, exit minus entry. Okay, so right now, as of this moment, we are up 8 ticks, which is $8 on one, okay? But we could make up to $37 on the actual trade itself. Let's look at where the market is. If the market expired, where the market was at right now, okay? And we're basically at 4.5. That's the indicative. It looks like it's lagging, but it's actually filtering out the spurious ticks that has the last 15 trades built in. So you'll see it move up. But right now, I mean, we're basically at 4.99, 4.50. So you can just say 4.5 is where we are. If it expired right now we're reading it at 4.5, okay, then what I'd make would actually be max profit. And we may be like right at max profit on this expiration. So with this trade right here, if it expired where it's at right now, we only got, you know, we have very little time left on the trade. We're going to make all of the profit. But it'd have to move huge the next 30 minutes for us to suffer a 1-to-1, not a catastrophic, a 1-to-1 loss. So start thinking, you know, start flipping things, think outside the box. And you'll see there's a lot of trading opportunities at Nadex. Y'all have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.